Lucid Group Inc. has had a busy few weeks since the merger in July 2021. CCIV merged with Lucid Motors to take the new premium electric vehicle (EV) manufacturer public. After speculative enthusiasm pushed the stock to nearly $65, reality struck and specifics about the deal structure became public. With shares presently selling between $20 and $25, here's why Lucid Motors might double your money in the next several days. Today, we'll compare the electric vehicle firms Lucid and Nio. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar videos to you. Comments are loved and featured in upcoming videos. Lucid Motors' merger with CCIV, which was completed in July 2021, generated a lot of buzz. In the second half of the year, Lucid Motors is planning to unveil its first vehicle, the Lucid Air, the all-electric sedan. Because so much noise and enthusiasm that Lucid created, many EVs from established brands are compared to Lucid Air, and Lucid is compared to other EV players themselves, with the most recent being NIO and LUCID comparison. We've had people ask us questions like which EV stock is more promising for the future. Should we invest in Lucid or back NIO? Before we get into that, let's take a look at the background, the parallels and differences between the two firms, and the business strategies that they both used. NIO is a Shanghai-based international automaker that specializes in electric automobiles. Lucid is an American electric car manufacturer formerly known as Ativa. Lucid, alongside EV manufacturing, also has energy storage and OEM operations. Business strategies. In some ways, NIO and Lucid Motors are quite comparable companies. Both companies are aiming for the high end of the market with their products and services. Lucid hopes to introduce more economical and budget-friendly variants in the future. For Tesla, this method has proven successful, but only time will tell if it will be as successful for Lucid. Another commonality between NIO and Lucid Motors that isn't well discussed is their strategic guardians. When NIO was facing a survival crisis and was on the verge of bankruptcy in 2020, the Chinese government stepped in to save the company's reputation and strategic position. Lucid Motors is financed by the Public Investment Fund of Saudi Arabia to push the company into the next level of operations. Electric vehicles make strategic sense for Saudi Arabia, which is preparing for a future without the use of fossil fuels. There are, however, some distinctions between the two. While Lucid Motors is investing in its own automobile manufacturing, NIO has formed a partnership with the state-owned JAC Motors to produce automobiles. When it comes to charging networks, the commercial plan is rather different. In contrast to NIO, which considers its NIO power charging and battery swapping stations to be a competitive advantage, Lucid Motors has partnered with Electrify America to build a nationwide charging network. With all of these similarities and differences in company tactics, the investor's primary concern is which stock to buy. Recently, a number of EV stocks have declined in price as the market has shifted away from growth toward value, creating bargaining opportunities. Company stocks are valued based on the company's decision-making, target market, and future insights. Lucid stock versus NIO stock. Following their initial public offering, many EV SPAC stocks have been smacked hard by reality. Romeo Power anticipated that its revenue for the year would be 70% lower than what it had projected. As part of its investment presentation, Canoo also informed investors that it was dialing back a number of critical components of its business strategy, which was previously disclosed. Lordstown Motors anticipates that its capital expenditures through the end of 2022 will be more than double the amount forecasted for the same period the previous year. Lucid, on the other hand, emerges as a winner with relatively attainable objectives. NIO has proven its worth. Because of the help of the Chinese government, the company was able to pull itself back from the brink of bankruptcy in 2020. The company's delivery volume has been increasing at a triple-digit rate for several months now. In the world's largest EV market, NIO is one of the most sought-after electric brands. No electric vehicle manufacturer can hope to achieve true scale if it's unable to expand in China. Tesla is making efforts to establish a foothold in China However, complaints have been increasing over the quality of its automobiles, which has softened consumer sentiments with Tesla. Due to surveillance fears, China has limited the use of Tesla automobiles by military personnel and employees of major state-owned firms. On the other hand, Lucid may have an advantage in the China market as it outperformed Tesla both in terms of efficiency and quality. It is a luxury car and may be the one to give NIO a run for its money in China. When it comes to China, NIO has a distinct advantage because of its home ground advantage. The Chinese government has gone out of their way to assist NIO. Despite their high cost, NIO's automobiles are eligible for government subsidies because of the company's battery-changing service. In contrast, if we look at the market outside of China, we can see that NIO's primary target market is great, but that the company is missing out on a significant portion of the market outside of China. Lucid, on the other hand, is not restricted by these boundaries. Despite these advantages, Lucid has yet to deliver its first vehicle, let alone meet analysts' and consumers' expectations. While the company has a lot of potential, the majority of it has yet to be proven. It's unclear how much scale Lucid will be able to achieve in the luxury EV market. It's also worth noting that shares of Lucid traded as high as $44 the day after the acquisition was announced, indicating that the market believes Lucid is worth that much even before deliveries begin. The controversy. China is clamping down on its IT giants, and the impact was particularly absorbed by DD Global and Alibaba. China pushed down on domestic EV makers, but it did so with the goal of eradicating small zombie firms and concentrating manufacturing power in fewer but larger firms. This does not necessarily imply that China will pursue NIO. However, this does not rule out the possibility of geopolitical dangers for the Chinese electric vehicle firm. Another recent controversy with another Chinese brand name, Huawei, which was accused by the US and its allies that its wireless networking equipment could include backdoors enabling Chinese government monitoring. Due to these worries, Huawei left the US market and US cellular carriers refused to sell its devices. The stock price of Huawei would have plummeted if it had been public. This should be on investors' minds for a future long-term position. The good news is that Lucid is already building the foundation for its Arizona facility, having just received approval from the State Zoning Commission for the second phase of the project. The initial phase, which is currently complete, is planned to produce approximately 34,000 units per year. The second phase that will follow up soon will increase the number to 90,000, the number of vehicles Lucid intends to deliver in 2024 and generate $9.9 billion in revenue. The conclusion. Customers expect a high level of product quality from a $170,000 vehicle, and Lucid will have to prove its bold technological claims, such as 500 miles of range, the ability to charge 300 miles in 20 minutes using DC fast charging, and industry-leading efficiency that outperforms even Tesla with real-world data and experience. If Lucid can accomplish all of this, it will pave the way for future growth potential in adjacent industries such as stationary storage and becoming an electric vehicle technology supplier to other industries such as aviation or agriculture, among others. Even though it won't be simple, Lucid has a legitimate shot at becoming an EV powerhouse, which would allow the stock to more than double in value from its current levels in the years ahead. What are your thoughts? Are you on Team Lucid or Team NIO? Who has the most potential? Let us know in the comments section. Mike believes Lucid stock will triple its value by 2023, making many rich. Do you guys agree too? That should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.